Hello everyone, and welcome to the program. Let's get right into today's global market scorecard. If I had to sum it up in one sentence, it would be the East shines while the West dims, and the divergence is quite striking. Let's start with US stocks. All three major indices closed lower yesterday. The Dow fell 0.51%, the S&P 500 dropped 0.52%, and the Nasdaq was relatively resilient but still down 0.32%. After hours, futures continued to drift lower. Nasdaq futures are currently down 0.6%, and S&P futures are off 0.65%. This suggests U.S. markets are likely to open under pressure again tonight. Now let's turn to our A shares, where the picture is completely different. The Chi-Next index surged 3.14% today, closing at 3,740. The Shenzhen Component Index rose 2.44%, and the Shanghai Composite gained 1.41%. This performance is leading every major global index by a wide margin. And this comes after several days of low-volume consolidation, so this sudden breakout on strong volume is a signal worth paying serious attention to. On the fund flow side, there are several numbers to keep in mind. The VIX jumped 6.6% yesterday, but the absolute level is still around 15, which is not extreme. The 10-year Treasury yield moved up to 4.72% and continues to trend higher. The dollar index is holding weak around 99.58. The most notable move is in oil. Brent crude rose 3.21%, and WTI surged 3.81%, closing above $85. Gold is steady around 4,471. Looking at how money is moving, today is not a simple risk-on or risk-off day. It's a barbell allocation. Part of the money is aggressively buying A-share growth stocks, while another part is buying hedging tools in the U.S. market. Look at the U.S. action. MSTR jumped 4.92%, ARKK gained 1.05%. Crypto-related assets are clearly outperforming the broader market, which tells us that within U.S. equities, money only has appetite for these high-beta names. Let's break down the session-by-session action. During the Asian session, A-shares were the absolute star. The Chi-Next rose over 3%, and the growth style dominated across the board. The SSE 50 only gained 1%, which shows that money wanted upside elasticity, not defensive weights. For the European session, we don't have reliable data, but with oil surging, energy names may find some support. That's an inference, not confirmed fact. Then in the US session, all three indices closed lower, completely failing to follow through on A-share strength. The Dow and S&P both fell more than 0.5%, and futures are still pointing down. The inflection point today came during the Asian session, when A-shares became the global risk appetite leader. The laggard is clearly U.S. large-cap blue chips. This cross-market divergence is the defining characteristic of today's session. Let's check against our morning report. Yesterday we gave a 40% probability for a sideways market, and the U.S. move was broadly in line with that. But there are two major expectation gaps. First, the strength in A-shares was massively beyond expectations. A 3% single-day gain in the Chi-Next is rare within a consolidation framework, and it tells us the model underweights the independent variables in A-share fund flows. Second, the oil surge lacks reliable information support. We cannot confirm whether it's geopolitical conflict or a supply disruption, and until that news is confirmed, this oil narrative cannot be upgraded to a market consensus. For the forward-looking view, let me give you some clear reference levels. For the S&P 500, we expect weak sideways trading over the next day, with a key range of 7,690 to 7,800. For the Chi-Next index, there's a 50% chance of a pullback after today's surge, with a range of 3,680 to 3,820. If it opens higher and holds above 3,750 on volume, the strength continues. If it opens lower and breaks 3,700, the chance of a short-term top increases. For the 10-year Treasury yield, we expect high-level consolidation with an upward bias, in a range of 4.65 to 4.82%. For the yuan, expect range trading between 6.72 and 6.77. Let me wrap up with the big picture conclusion. Today's market is not a one-way street, and it's not a low-volume consolidation. It is structural divergence driven by cross-market decoupling. A-shares surged on strong volume and became the strongest global line, but this strength needs confirmation tomorrow. U.S. stocks are in defensive pullback mode, not panic selling. Oil is a wild card waiting for confirmation. In terms of action items, stay attentive to A-share growth names but do not chase highs. On the U.S. side, continue to avoid large-cap blue chips, and crypto-related assets deserve attention but manage your risk. Markets are shifting, and our thinking needs to shift with them. That's all for today. See you tomorrow.